What's going on, everyone? So clearly a very eventful day. I alerted that I was getting into 396 puts yesterday before the close. These are currently $12 in the money, and if you're still holding them, they're up almost 200%. I sold them for around 100%. A lot of people made a bunch of money, and the reason why I went short was because there was a play that essentially the last 9 times this happened, the NASDAQ ended up falling even lower. So today was the 10th time. Clearly it worked out, and now we are looking to buy the dips. I alerted that I was getting into a bunch of dip plays, and I'm going to buy the dip today and tomorrow. So in today's video, we're going to talk about what happened. Why did the market fall like this? We're going to talk about the SPY, the IWM, the NASDAQ, 30-year bond, and of course, Bitcoin and Ethereum. So without further ado, let's do this. All right, number one, we fell because the Fed released their minutes. So all right, so I just want to show you guys something. So the Fed, remember, the last meeting of the Fed was on December 15th. And this is when Jerome Powell had a meeting. Basically, he was saying that, hey, you know, we're going to ease down on the buybacks according to the market strength, blah, 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 according to the labor markets, according to unemployment rates. So he said all of this on December 15th. And basically, you know, the market, it was really just like it didn't really matter because we ended up regaining all of the losses anyway, right? So now today, they released minutes from that same day. And these guys said, hey, you know, they literally said the same exact thing. Literally, they said the same exact thing, and it caused fear in the market once more. And it's crazy that they released news 2 weeks later after they already said exactly what they were going to say. So it's really sick. They're really just manipulating the market. And this is not a reason to start fearing, because this is what they said exactly 2 weeks ago. And we already know how they felt. So they regurgitated the same news, and then they released the minutes. It's really crazy. So essentially, the Fed minutes that happened today, it was basically exactly what they said on the 15th. And Jerome Powell addressed it anyway. So there's that. I mean, you know, they basically mentioned the same exact thing anyway. Let's go ahead and take a look at the SPY, all right? All right, here is the SPY. All right, so you can clearly see that it failed at this level of resistance, this trend line here, right? Perfectly. And then not only did it fail at the 23.6% fib at 473, it broke down below 470, and it also broke down here below this 38.2% fib at 469. And now essentially the next level of support to the downside is 465.5, which is this 50% fib level. Now, looking at what's going on here, technically this is still a potential bull flag, and even a retest of this 50% level is still justifiable for a bullish pattern. Okay, so yes, we could continue falling tomorrow. I do personally think that we could have another red day tomorrow, but then tomorrow is going to be a good dip buying opportunity, in my opinion, because I'm going to show you guys exactly why later on in the video. But right now, you can also see that the MACD is now oversold. The RSI is now sharply falling, which is a good sign. Obviously, I mean, it had to sharply fall. You see the move today. So these are good signs. We're now oversold on the MACD. I mean, we could potentially fall down lower tomorrow, but again, we timed the top of the market perfectly. We went short perfectly for multiple reasons. In yesterday's video, I explained in detail why I thought the market was going to fall, and it did. So, I mean, that worked out beautifully. So essentially, that's really it on the SPY. The SPY actually was held up the entire day, actually, due to the strength in crude oil and the financial sector and the healthcare sector. So the SPY did not collapse as much as the NASDAQ and the IWM. You can see it only fell 1.9% compared to the IWM and the NASDAQ that fell over 3%. So there is still potential room to the downside on the SPY. But essentially, I do think that tomorrow is going to be a good dip buying opportunity. I did alert that I was getting into some swings at the end of the day today. And yeah, for now, this is my analysis on the SPY. Definitely now, let's go ahead and take a look at the IWM, and then we're going to go and take a look at the 30-year bond, few other stocks in the NASDAQ, and then the NASDAQ. So let's take a look at the IWM. All right, so for the IWM, you can see that there's lots going on. I showed yesterday that because we failed to close above 226.61, that was very, very bearish. And obviously it worked out. So now we still held right here above this 23.6% fib at 217.19. So yes, we closed below multiple levels of support. That's completely fine. But we held above, we still showed some sort of strength here, holding above 217.19. Of course, you know, the IWM is the most susceptible to huge moves. So we could potentially fall down tomorrow to below 215. Because if the SPY ends up continuing to fall, then of course the IWM is going to fall as well. So really the IWM is going to key off of what is going on in the overall market with the SPY and the NASDAQ also. So you can see right now, this was a huge downward move, yet the MACD barely crossed down below. So right here, you can see the MACD, the blue line, barely crossed down below. So that is not a bullish signal. So what we wanted to see was, especially after a huge downward move like this, we would want to see the MACD, you know, really showing weakness. But that was not the case. It's still very tight. So essentially when it's like this, it means that there's still more room to go to the downside. So just be wary of that. And essentially, you know, with the RSI also falling down like this, it's not as bad, but the MACD showing this sort of you know, strength in its formation, it's not bullish at all. So there's my analysis on the IWM. Now let's talk about the other things that essentially, you know, it's going to be fun to talk about. So let's start with the 30-year bond. All right, so here's the 30-year bond. When the 30-year bond is bearish, the NASDAQ is bearish. So you can clearly see that we broke down below extremely important levels of support here from back in October. So 157 was an extremely important level of support. And over the past few days, we've broken below 158 as well as 157. So right now we are at 156.12. The next level of support on, you know, the 30-year bond is going to be 155.16. So right now, we had a vomit to the downside, yet the RSI is still not oversold, which is very, very bearish. It means that there's still more potential room to fall on the 30-year bond. And if that's the case, that means that there's still more potential room to fall on the NASDAQ, right? The one good thing, though, is that we are now extremely oversold on the MACD. And usually when this is the case, there is supposed to be a bounce. When there is this much of a gap between the blue and the yellow line, especially when we're oversold, there is almost always a bounce that should happen soon. And another thing is that we are outside of the lower level of the B band for 3 days in a row. So the only other time that this really happened was back here, which, you know, we ended up bouncing again, and a few other times in the past. But usually what ends up happening is we do bounce. And it's very, very rare that we have multiple days, you know, falling outside of the lower standard deviation. So, you know, we're nearing a bottom, I think, a short-term bottom in the 30-year bond. So because I think that we're going to bottom out a bit in the 30-year bond, that can also be a good sign that we're going to bottom out in the NASDAQ. Okay, so there's my analysis on the 30-year bond. Now I want to look at the largest, basically, stocks in the NASDAQ that are doing very, very badly. And yeah, let's go ahead and take that look. All right, so number one, you can see Amazon here, right? Amazon is showing tons of weakness. It is a huge company in the NASDAQ, and we're now outside of the lower level of the B band. So once again, you understand, you know, my thought process of buying dips in companies, especially in the SPY, QQQ, and IWM, when we are outside of the lower level of the B band, right? So it doesn't apply perfectly on these larger companies. But because these companies are so large, there are tons of algorithms that are looking for these things. So right now, yes, we fell outside of the 3,300 level, and we have support at 3,279. Personally, we could end up breaking that level tomorrow and falling down to, 3,250. That's completely normal. But again, that is exactly why I think tomorrow is going to be a good dip buying opportunity in the overall market. Because, for example, right now, Amazon, you can see that there's still potential rooms to the downside. But because the 30-year bond is also showing a potential bottom, it could mean that there is a potential bottom in Amazon, okay? So the other stock that I want to show you guys is Microsoft. Microsoft is another huge company, and it broke down below this support. But similar to Amazon, we're now trading outside of the lower level of the B band. And for Microsoft, whenever we are trading outside of the lower level of the B band, you can see early December, December 20th, you can see back here in September, whenever we're trading outside of the lower level of the B band like this, eventually we end up bouncing. Okay, so once more, yes, we did fail below 318. But then tomorrow we can end up, even falling back down and filling this gap to 312, 313 essentially. But then if that were the case, that would be a much better dip buying opportunity, and then we would potentially bounce. So that is my thought process for these larger companies. And then of course, we have to take a look at Google. Google is also almost a $2 trillion company, and it is extremely overextended to the downside. So algorithms are going to want to buy these companies when they are that overextended to the downside. Sure, we can end up falling back down to, even 27.30, 27.20. That's completely fine. But then look at how overextended we are to the downside here on Google. Every single time we've been this overextended to the downside, there's always been a bounce. Even over here, we haven't been as overextended as we are currently. So there's always a bounce usually. And I think that is what is going to end up happening, because we can also see the bottoming in the 30-year bond. We see all of these large companies bottoming out in such a huge way. You can see the MACD on Google is very, very oversold. We're approaching oversold on the RSI. And, all of these companies are in the NASDAQ, obviously. So if these large companies are about to form a bottom, potentially, that means that the NASDAQ is about to form a bottom as well, right? So there's Google. And then also today, I want to show you guys Netflix. So Netflix, this is the first time Netflix is oversold on the RSI since September of 2019. So let's go to September of 2019. Since September of 2019, this is literally the first time we've been oversold on the RSI. Right here, you can see this. So, I mean, all throughout for the past 2 years, we've just been in a, huge rally on Netflix. And now today's literally the first day that we're oversold on the RSI. So I alerted that I was getting into some swings on this as well. You can see that we're overextended to the downside on the Bollinger Band here as well. We're literally sitting on a trend line support from back in July that I drew here. And, it acted as a resistance in during the summer here. And then it acted as a resistance again towards the end of summer. And now here we are back again. So a lot of these super larger companies are very, very overextended to the downside. Algorithmically, they're to the downside in the Bollinger Bands. They're at multiple levels of support. But there's multiple reasons. So, at this point, when there is this much weakness for these large companies, hedge funds and banks are not going to be looking to short. They're going to be looking to buy dips. All right. And that is my reasoning. That's exactly what we're going to be doing here. We're going to be buying dips. If we're wrong, we're wrong. But from a trading standpoint, you do not short weakness. You short strength and you buy weakness. All right. So yeah, there's my reasoning for all of these other companies, right? And now let's go ahead and take a look at the NASDAQ and put it all together. All right, here is the QQQ, the NASDAQ. All right. Lots of lines. number one, we bought this bottom here on December 20th because we came back and retested this blue trend line. We're almost there right now. All right. Number two, we bought it because we were outside of the lower level of the B band. And currently, all of those other companies that I showed you are trading outside of the lower level. And I showed that there could be another red day tomorrow. So, essentially, I do believe we're essentially $4 away on the NASDAQ to being oversold again on the B band. And when that does happen, that's usually a very, very good dip buying opportunity. Historically, always. And every single time this has happened, I literally share it with you guys on Twitter, and it always works. Literally, it's literally always worked. The only time it won't work now is if there is a huge difference in the macroeconomic lens of what's going on with the Fed and what's going on with the interest rates. But currently, nothing has changed. Literally, not a single thing right now has changed. The news that came out with the minutes for the Fed meeting, it was the same exact news that basically happened when we had that meeting 2 weeks ago. So again, nothing has changed in the macroeconomic lens. We are $4 away from being overextended to the downside and being oversold on the B band. We are very, very close to this trendline level of support. We're $2 away from the trendline level of support. And you know, the MACD now is very, very oversold. So again, guys, now is not the time to go heavily short. Now is the time to start scaling into long positions, because retail, when retail is fearful, right? The old adage, you have to buy when people are fearful and you have to sell when people are greedy. That's exactly what we did. We went short the market because it looked terrible and we were at like some sort of a top. But essentially now we're looking to buy these dips because we are very, very overextended now to the downside. And these larger trillion-dollar companies are also very, very overextended. If that is the case, that we continue falling, that's why we have risk management. We only buy small positions. The first few days of the year so far, we've absolutely demolished. We've played perfectly. But now we have to be a bit smarter because the markets are about to be very, very turbulent. So right now, this does not look like a bull flag anymore, obviously, right? We came back and we invalidated it. And essentially, we've broken down below this 23.6% fib. And, you know, yeah, this is not a bull flag anymore. So, that is why we're looking to buy these dips. Tomorrow, we could have another red day. We can end up falling down below 380. We could fall down below to 378. But guys, these are really, really good dip buying opportunities, in my opinion. And I'm going to alert that I'm going to buy these dips, regardless of whether or not we break down below this trend line. If we are oversold on the NASDAQ, on the B bands, I'm going to buy into calls for probably 2 to 3 weeks out. That's just what's going to end up happening. And then I'm going to buy more dips in Google, Microsoft, Netflix, and the other stock that I was sharing as well. But essentially, this is really it. Now is not the time to become super, super bearish. It was time to be bearish when we were all the way up here. All right. And yeah, man, it's been working out perfectly, but do not be fearful. You cannot trade this market emotionally because you're just going to be very, very manipulated by day-to-day candles. You have to think forward. You have to think ahead of what's going on right now. Banks and hedge funds want people to be fearful. They want people to sell so that they can buy cheaper. Okay. And when algorithmically these large trillion-dollar companies are so overextended to the downside, it makes no sense to short. It makes all the more sense to buy these dips. So essentially, there's my analysis on the overall stock market. I hope I did justice and I explained to you guys my outlook for the SPY, the IWM, and the NASDAQ. I'm going to be buying these dips tomorrow and on Friday, most likely, if we continue falling. Hopefully, we bounce. But yeah, this year has been amazing so far. Now, we definitely need to go ahead and take a look at Bitcoin and Ethereum. All right, Bitcoin. I've been telling you guys for weeks that we were going to come back and retest these two fib levels here at 45,000, at 44,000, the 618 and the 786% fibs. I've been sharing that for weeks because every single time we have a huge wick to the downside, we always come back and retest these three fibs. I think we just didn't touch it once. We didn't touch the 786 once, but we've touched the 618 and the 50% every single time. And clearly you can see that we are below this level here. And now is when the fun is going to begin, because now Bitcoin is trading outside of the lower level of the B band. The MACD is falling lower and the RSI is now falling lower as well. So if this level doesn't hold, we're obviously going to come back, retest 42,000. And if 42,000 doesn't hold, you know, then 40,000. And then if 40,000 doesn't hold, then it's going to be down to this 39.5. This is going to be the main level of support that we're going to be watching here. 39,500. Let's just leave that there, that circle. If we end up falling here quickly, which I hope we do, I want a nice flush to the downside, make everyone that's leveraged lose their money, and essentially that would really, really cause the RSI to become oversold, and then that would cause the MACD to become very oversold as well, hopefully. From there, that is when I think the market is going to have a very, very interesting time. Basically, are we going to continue on in a very, very big bull market, or are we going to break this 39,500 level, fall down lower, and then come back and retest 30,000? But this 40,000 level is now very, very important. And I do think that we could potentially come back and retest this level because the RSI still is not oversold yet. And we could, but 42,000 needs to hold. Anyway, really what's going on now is essentially we need to see, like, the next few days are going to be very important. It's not necessarily that we're going to have a huge downward move, right? We could hold 42,000 as support and it could, hold there perfectly, but I don't think that ends up happening. I still think potentially we can come back and retest 40. But again, from a retail perspective, if a lot of people are going short right now, and many people are shorting the weakness, similar to what people are doing, they're shorting the weakness in the indices and the stock market. What these banks and what these exchanges want to do is they want to squeeze people. So they know that people are going short. What they deliberately try doing is they try to bring the market up abruptly, causing all of the people that are shorting here to lose all of their money. So that is really, these next few days are going to be very, very interesting and fun for Bitcoin, man. Let's go ahead and take a look at Ethereum. Ethereum looks really, really bad from a technical standpoint. You can see that regardless, we had a huge red day today. You can see that the MACD is still not very oversold. It barely crossed down below. So now from the same logic, right? If the MACD currently, if a huge red candle like this only caused the MACD to barely make a blip to the downside, right? Technically, that means that if the MACD now continues to fall and retest these levels here, Ethereum would be all the way down here, right? That's just the way that this momentum and the strength is showing to the downside. So that's why, right now it does not look strong. We crossed down below this downtrend level here, this blue downtrend level, and we're currently down below it. We failed at this 3,600 level, and we're still not even really oversold on the B bands. So there's still tons more room to the downside on Ethereum. And if that's the case, Ethereum and a lot of these altcoins, we needed them to help bring the market up. But that currently does not look like it's the case right now. There's still tons more room to go to the downside on Ethereum. 34.75 is a very important level of support. If that breaks, then we're going to come back and retest all of these old levels. But it really truly depends on what Bitcoin is going to do. But right now, Ethereum is of no help. Ethereum looks very, very bearish as well. If you guys have made money with any of my plays, if you guys are learning anything, please make sure to like, comment, subscribe, put on post notifications. Thank you guys so much for all of your support. I really genuinely appreciate it. I have so much love for you guys, and it's a blast, you know, being on Twitter with you guys and talking to you guys. And I really hope that I'm helping you guys. And yeah, man. Tomorrow, hopefully, if the market falls lower, we're gonna buy more dips. And hopefully we don't have to start working at McDonald's again if these dip buys don't work. So yeah, man, I will see you guys tomorrow. And of course, have an amazing day. Thank you.